Welcome back, folks. Taking a look at yesterday's Nasdaq chart to do a study on the charts. My approach to the markets is to come to the markets at a very specific time, and that is around the 10 a.m. New York session. And I like 10 a.m. because it's the last hour of the session. And in my experience, I have found 10 a.m. to offer the best setups. Now, when I come to the market at 10 a.m., I'm looking to see, has the market engineered liquidity? If I'm down low, so here we are at the bottom end of the daily range at that point in time. So at 10 a.m. we're quite low based on the price action on the left hand side. We can see that we have a high of day, okay, which is around that Asia time, right? For me, the first session of the day is Asia, and I can see from where Asia's high is, that is essentially the high of the day prior to New York. And then in New York, we are at the low of the day. So we are on the lower end of the daily range. And that's what I want to see if I am looking to long the market, okay? Now, the second thing that I want to see is, has the market left, has it engineered liquidity? Now, we can see that the market has left equal highs, right, all along this chart, and very clean equal highs at the high of the day, okay? Essentially, if the market is to go lower, then it would essentially sweep these highs to move lower, sweep these highs to move lower. But when we see the market is not sweeping highs and leaving equal highs, okay, like here, high of New York has left equal highs, okay, high of London has left the highs of Asia, I see that as the market is engineering liquidity. And in New York, that gives me an idea to perhaps look for long setups. And you can see that's exactly what's occurred here. At that time window, the market has repriced higher and swept the high of New York, okay, and then has formed a new bullish signature. Notice that's the only bullish Fair Value gap on the way up that the market is then pushing down into for the lunchtime session. We still have liquidity resting above here, okay, and we also have our bullish breaker. So you just need to identify signatures in alignment with your bias and look for the market to pop into those signatures. For example, here we've established down here at 10 a.m. that we want to be looking for longs. It doesn't mean we automatically long the market. We jump down to a lower time frame, like a 1 minute, 3 minute, or a 5 minute, or even sub-minute time frames, 30 seconds, 15 seconds, and look for our setups to take advantage of our directional bias. And when I'm down here, as I said, and I can see that the market has left relative equal highs and a daily high still intact, which has very clean equal highs, then I am determining that the bias is bullish. Now, if I don't enter down here, because there may not be a setup on a lower time frame that I'm comfortable with, then I'll just wait, okay? And the easiest, if you don't find a setup, and you should be able to find something down here on a lower time frame, the easiest setup is to do and wait for the lunchtime session, okay? We can see bullish Fair Value gap that the market's popping down into. We can see the bullish breaker the market's popping down into, okay? And we have very clean equal highs that the market will seek, okay? And now we've taken out this high, and we can see the market's forming bearish signatures. And my expectation would be that we now seek these equal lows. We now seek these equal lows on the downside. And that would be my expectation for the market to be seeking liquidity resting below. So always go back and study the charts, even if you are not trading. Engage with the market by studying the charts, going back and looking at the market to identify how could you have engaged with the market by identifying equal highs or equal lows, and look at what the market's doing at 10 a.m. New York time. In my experience, that is the best time where setups form, and you can very easily determine the bias for the day when you're down here at 10 a.m. by looking at, has the market left equal highs or inefficiencies that the market may need to come back into. You can see the market has left equal highs, as I've said, okay, very clean equal highs on the left-hand side, and inefficiencies that the market has come up into, right? And along the way, if you can't see your entries at the low of the day, then wait for the next session. For example, as I mentioned, the lunchtime session has left very clean bullish signatures. You get your breaker here, you get your Fair Value gap here, okay? You also have your order blocks, right? You also got inversion Fair Value gaps, right, along the way that the market's pushing down into, that you can use to engage with the market, seeking equal highs, inefficiencies, high of the day as your targets on the left-hand side. The market only moves for two reasons. It's either seeking liquidity in the form of equal highs or relative equal highs, or it's seeking an inefficiency that it needs to come back up into, okay? So look for inefficiencies on the chart or liquidity. For example, we can see there are now some equal lows beneath where the market is right now, and most likely that's going to be a level the market is going to be drawn towards, okay? Hope the video is useful. I look forward to talking with you in the next lesson.